Hi everybody, this is Erica Slayton here, and I am going to make a quick video about something that I see repetitively on credit reports. And as you can see from my background, I'm not in my normal spot because I'm in the middle of training right now, a new employee, but I wanted to just take a few minutes out of my schedule to share with you some of the largest impact items that hurt your credit. And I think this is something that probably frustrates me the most. Not that people have bad credit, but the fact that these things are not taught in school. And I can tell you as a parent of two boys that are old enough to understand finance at this point in their lives, that they hear me talking about this with people all the time, and they always tell me that they never have ever heard about this kind of stuff in school. And it's just one of those things that frustrates me as a parent and of course as a person in finance for 23 years. So first things first, one of the worst things for your credit, of course, is late payments. So if you have a late payment on your credit, especially within the last 2 years, that's going to have a really high impact on your credit scores. It is going to cause them to drop, and it's going to cause them to drop really dramatically. The second thing that is not good for your scores is high balance to limit ratios. What I mean by that is, on a credit card, if you have a $1,000 limit on your card and you have a balance of $900, you're 90% advanced on that card. That is not good for your credit. The target, the really good place to be, is 30%. So if you have a $1,000 limit on your card, you really don't want to carry a balance over $300. Now that's the preferred thing, but the ideal place to be is 10%. And I know that's very difficult because you're thinking to yourself, how the heck am I going to get there? But you can, and you will get there eventually if you have balances that are really high on your credit cards. So 30% should be your target. 30% of your limit in your balance should be your first target. And then I want you to get to 10%. Really paying off those cards is also not a huge advantage. A lot of people just think, well, I'll just pay them all off. Well, it's actually not an advantage to pay them all off. I want you to keep it between 10 and 30% advanced in order for you to get the highest score improvement. The other thing that I see very, very frequently on people's credit is finance company loans. Now, this may be because they're trying to reestablish credit. This could be because they are trying to consolidate bills, like they have a lot of credit card debt and they're trying to consolidate bills. The problem is, while yes, finance company debts will show up on your credit report as a trade line or an account, so to speak, but it's not good. And the reason is because the credit bureaus essentially are coding that particular account, that finance company account, as, now I'm not going to say a negative trade line, but it is not good for your credit. And so your scores will drop if you use finance company loans. So keep that in mind. Really, they should be reserved the absolute last resort of any other option, including taking money out of your 401k for a hardship or anything like that. The finance company loan should be the absolute last resort. The other thing that I see, of course, that hurts your credit, and this kind of is common sense, and that is recent collections. So collections and charge-offs is where you owe money to a creditor, but the ones that really hurt you the most are the recent 24 months of collections and charge-offs. So anything that's happened recently, whether it be lates or recent collections or charge-offs, those are certainly going to hurt your credit scores. And of course, like I said, those high balance to limit ratios. So that's the most commonly three things that I see on people's credit reports that are hurting them, besides the obvious judgments, tax liens, bankruptcies, and things like that. I just wanted to share this with you because as I have looked at about 10 credit reports today, I've been seeing a lot of those patterns, and I just wanted to share this with you because I thought maybe this would prove useful for you. Please also share this video. Let your friends and family know the tricks, and please, whatever you do, teach your children these tricks as well because they learn from us. So with that being said, my name is Erica Slayton, Wallach & Volk Mortgage. I've been lending for 23 years in the mortgage industry. I've seen a lot of credit reports over the years. And if you need help with financing, whether it be to purchase a home, an investment property, a second home, refinance, any of that stuff, give me a call and I'm happy to help. Have a great day.